Hello everyone, welcome back to another new video of Bull Inspiring. This is hashtag trading mistake part 2. So 90% of traders do mistake when they are placing this trade, as you can see on my screen right now. So let's try to make the trade as a 90% traders, and when you are just doing your analysis as perfectly as usual you can. So you can analyze the completely, you can familiar this all of your imbalance zone and demand zone, everything you find this, and where you are going to placing your trade, and you can see this is market completely make you tag in to your stop loss. So first of all, we identify it's did a breakout structure here, so we can mark it. So this is our highest point, we are marking it. So let me mark it perfectly, and then we see this is a break stop structure, and this is completely fine. The 90% trader is looking like this. It has been break up a structure, so this is fine. So this is 90% trader. Even I'm thinking that this is a break up a structure. So like you assume that you are also thinking that this is a break up a structure, fine. Then we're gonna finding any kinds of point of interest zone. So what you will do, mostly you will make a Fibonacci. Yes, fine. The Fibonacci from top, from bottom to high to the low. You can see this is the 0.5% of area where you are actually finding any kinds of zone there. So let's try to find out any kinds of zone. So if we find out this is 0.5 level area, we find out this is the imbalance thing that I have already made the video, that imbalance and a basic strategy, that how they works. So let's try to first, this is, you can see here we find in 0.5 level an FBZ and imbalance zone. So we can find out. So let me draw this FBZ and imbalance zone. So this is FBZ or imbalance zone, and then we can see there is an, and our trading demand is the last candle of which is produced that FBZ or imbalance zone. So that's it, and then we're going to finding this area also a tiny, but you can see this area actually a bigger imbalance in the rest of area. Also you can see this is a recent swing structure, and which is actually broken this level area, which is actually broken the recent internal change of character, but it is actually candle not close. Even if you consider in lower time frame, because this internal structure, if you consider it as a lower time frame, the change of character is happen, fine. Then we're gonna see that there is also an imbalance, there is also an imbalance zone, and our trading structure is the last candle which is before that imbalance. So this is fine, and let me remove this, the Fibonacci, and this we're not gonna trade in a busy or imbalance, we're trading on the demand. So you can find two opportunities in this market, so this one and this one. So fine. Now if we forward this market and let's see, you can see this is not tap, but the second one, when you can see that this area it has left a gap before tapping, and after some time then it take a pullback, and then you can see it is smashed down, and the demand is not hold, it's completely broke this demand zone. So now let's remove this, because this demand zone is not set up, it's failed, and you can see the last one which is here. So if we are seeing that, if your assumption and if you take this confirmation, so you think this demand is not work, but this is the last demand, this should be definitely work. Like you see you have placed that stop loss, and you are definitely keeping that your stop loss the lowest point. So this is the lowest point and you keep it, and you are targeting definitely the highest point, and you see that you find confirmation also zone into there. In lower time frame confirmation also you are finding, but this is fine, you will find the confirmation, the change of character in bullish side. So what we will do with this market, let's see. You can see it's completely take you out from the market, and it has been swept your stop loss zone. So this is the trade is gone wrong. So where actually we're doing the mistakes, I will explain now. So what we can see this, first of all I'm gonna tell you that whatever that explanation, whatever the analysis we did is completely accurate. So this is actually your analysis is right, but you trade in the wrong confirmation, in wrong setup. So this is the thing, that your analysis setup is fine, the chart pattern and your whatever your price action, everything is fine, but you enter this trade as a wrong setup. Why it is called wrong setup, I will explain you that wrong setup based on this. So first of all let me remove this, all of this drawing, because this is a wrong setup. So for that I need to go for, so first of all let me make it as a preview mode, this area, fine. So why I said that is a wrong setup, so I need to go for the little bit of bigger previous picture on the market. So because when we're going to making this identifier, first of all we need to identify the market structure. This is where we are wrong, because we directly consider this area as a break of a structure and the trade is placing directly. We didn't care the previously what happened. So this is where the mistakes. So we must be definitely need, before placing trade, we must be need to read the previous history, what is happened in previous. So this is why I need to structure and find that identify the structure. If you still didn't watch my identified how to identify the market structure, you can watch this video. Also I will add it in the I button. Also you can find into my video description link. So now let's go to there, and first of all let's try to find out the previous chart picture happened. So this is actually previous highest point if we consider it. So this is our highest point, fine, and we're going to mark it as a high, and this is highest point. It has created a lowest point at this area. So this is our lowest point and this is the low. Right now this is the low, and you can see what you can see that the market is going a pullback and then break this down. So this area has been the market is pushing down. So this means this low is not become anymore the low here. The low has been shifted to a break of structure, you can say, or change of character or break of structure. This is in downside. So now the highest point is, we're not interested this highest point anymore. We're interested this highest point, so which is actually created a new highest zone, and this is the lowest point. So now we're going to mark it, this is then our new high, we find it. Now we're going to mark it as our new lowest point. So this is our new lowest point, fine. Now we're trading inside of this zone. So let me forward this high point. So now what we're interested in, we're trading inside this zone. So this is where we are going to finding our trading strategy and things here. So now we can see this has been the market is, it has been D-Day, it's take some consolidation here, and then it's tried to go push up but failed. Then it's tried to push up and then it's break this high. So this is where, so this is actually the last move which break this highest point. So this is where we're interested in this move. Any kinds of opportunity find out, we are going to place trade into that area. That's this move, we will make it our point of interest zone. So let me remove this drawing. So first of all, let me remove all of this drawing. Okay, this one and this one. So when it is did the breaking here, so this is why we can see it's a change of character, because previously we are in the bearish and right now it has been shifted to the high and changes the trending structure, and it is created a change of character, because previously we are bearish but right now we are not anymore bearish. Right now we are bullish, so definitely we will be bullish here. So now what we can find out, so this is our the last move, this one, the last move which is here. You can see this is our last move, and this is the move actually break this the last previous highest point. So this is where we're gonna mark it in this area. So we will right now here we'll do the same thing. We're gonna analyze this, we're gonna providing our Fibonacci retracement from the top to the highest point. So this is the highest point, or if you see this is actually created a move from here to here. Why we will not consider it as a break of a structure? The reason is, you can see it has been tested back here. If you see it's the tested this area and then shoot out, but it didn't even tap to the at least 50% level of this move. It's not reached at least the 50% level. If the market is not reached the 50% level at least, in that case if it breaking here, then this is not a real break of a structure. It's actually internal move, and this is creating an endorsement. So this is creating an endorsement, and the market is keeping some liquidity in this area. So endorsement topics also will be came tomorrow, and that's also I will be share the endorsement topics. So now we are going to remove this drawing. So this is where our 0.5% at least 50% level of Fibonacci retracement. So now we are finding any kinds of point of interest zone. Now if we see, we are mostly interested in this 0.68 to 78 zone, 18 this area, but you can see there is actually no imbalance zone, but this area we can find an imbalance zone here. So now we'll go for there. Let me remove this drawing, remove this one and this one. So first of all we're gonna mark it as our imbalance zone. So this is our imbalance zone, this is our imbalance zone, and you can see imbalance zone, the 50% of our imbalance zone is already filled this move, right? This move is filled already. Now I'm gonna removing this our Fibonacci retracement, and which is our demand is, You know, always our demand is the last candle of which is created this imbalance or a busy zone. So this is where this is our demand zone, fine, and this is already tap our FBC imbalance, so we are not interested in the FBC anymore. So we are gonna see that this is created a inducement and there is some of liquidity the market is left it here, because the actual institutional order is left it inside this candle, inside this area. So the market, before going to move there, it should be take at least this order here and then shoot out. So this is where we're interested in our demand zone of imbalance. So here I'm gonna see that this is our liquidity zone, the market should be here, and we're gonna place our order in this area and shifting, keeping the stop loss at least to the demand zone below. As you can see, there is a much bigger targeting, it's getting a bigger stop loss. So this is why, and our target is becoming this one, which is actually 1:24. If we keeping that stop loss below there, it's getting so far away. So this is why I'm thinking that it has already tested here and it has created a liquidity zone. So I hope the market should be come back and it should be test only. It should be test only the center of the zone and take this order. If it cross below there, then the trading setup is completely getting invalidated. We're not interested anymore. I want the market should be came at least the 50% of this level zone, or if it tap only the top, then it's fine. So this is where we're interested, and we place our order and we're keeping our stop loss below the tight hitly here, and the target we can keep it this level, and if we find some bigger target we can go for the highest point, at least this one we can target. This is the recent high, that's fine. Now we can see what we can see, that the stop loss and our analysis and price action, everything is going perfect, and we think that structure, and we identify the previous structure, so we think the statistics, our price action is accurate, so it should be work according to our analysis. Now let's see the market should came or not. The market is coming down, you can see, and you can see it was coming down, and you can see one candle it has been placed our order successfully, and you can see that it has been tapped the zone of our demand in top level, and our order is already placed here. So now see, let's see where the market is gone. You can see that we have successfully hit that TP successfully here. So after hit the TP and then market take back again, maybe when this traditional is making that orders, maybe some order actually it's not executed, maybe the 50% order should left it here. So this is why the institutional investor take the market came again after taking, this is the recent sweep of the high, after taking this high liquidity, and then they force the market to come again and then shoot out. So now if we are completely waiting here, but we are not waiting because we already get the target. But if someone is not placing that our break even, stop loss or anything else, if they are waiting completely here, they can get even bigger target here. If we see that, they can get even bigger target. So let's see, you can see the market is completely playing out, and it's even bigger target you can achieve here. So like this 1:3.3:3.1 something, you can get at least, if you're targeting this, trailing this, you can get at least $300 by risking 100. So this is how actually the trading mistake is works. So always remember, before placing any trading and before applying any strategy, always do focus on your marketing structure, the trade marketing structure. Always focus on the previous history and what happened in the market. So after analysis the previous market structure, then do the recent market structure, and then do the trade confidently. So I hope you solve all of your trading mistakes like this way. And if you enjoy this live video, this of trading mistakes, if you want more videos just like this, you can like this video and you can share with your friends, and you can subscribe our channel and press the bell icon so that you will never miss any videos of this type. And thanks for watching this video.